It doesn't matter what we're reading in the news. It doesn't matter what the Fed rate hikes does to oil prices or these market sell-offs. At the end of the day, OPEC is in control. There was a time that America was in control because we were producing massive amounts of crude, but those days are over. I mean, the Permian Basin, the rig count is dropping as where it should be increasing, but it's not. Oil output is dropping. We're in a 5-year underinvestment cycle, and all of that is putting the power in Saudi Arabia, putting the power in OPEC Plus. Now, here's the deal. Saudi Arabia is tired of his messaging falling on deaf ears. His messaging has been the same. Listen, we need to start investing in tomorrow's energy future. Oil is tight right now. Oil demand is increasing right now. And so nobody's listening. That's where the message that is winning is what is coming from the West. Hey guys, we're replacing fossil fuels with green technology. Global warming is destroying the world, and it's all because of fossil fuels. Doing everything we can to reduce energy prices, and demand is dropping due to the restrictions that we're putting in place and also the recession fears. I mean, we believe that more than we believe what Saudi Arabia is saying. And he is making threats. Look, guys, I'm going to reduce oil output because fundamentally speaking, oil should be over $100-something a barrel. But this market manipulation, these federal rate hikes is controlling oil prices. And I'm tired of it. I'm tired of selling the most important resource that I have, which is limited for a fraction of the price than what it should be. And so he's going to send the message, guys, remember, because I think the world forgot that oil went from $30 a barrel over $100 a barrel, quite simply because OPEC Plus organized a group and reduced oil output by 10 million barrels a day and controlled the oil markets, digging us out of a massive ditch. And Saudi Arabia was the kingpin behind all of this. And so he wants to remind the world, hey, listen, you guys don't control oil prices. You could try to manipulate oil all you want, but I'm going to bring the message and remind everybody that I'm in control, okay? And so it doesn't matter what happens to the oil markets. At the end of the day, Saudi Arabia has the last word, and he could undermine everything that the federal rate hikes is doing, everything that these market manipulations, these market sell-offs is doing. It doesn't matter what the smartest analysts in the world are saying. At the end of the day, they have the power and the control to change everything in a moment's notice, okay? And so right now, OPEC president backs potential oil output cuts, okay? OPEC's united front on a possible action grew stronger as more nations endorsed Saudi Arabia's view that supply curbs may be needed to stabilize world oil markets. Within 48 hours of comments from Saudi Arabia, Energy Minister Prince bin Salman that OPEC might have to curtail production, fellow members Iraq, Algeria, Bahrain, Kuwait, Guyana, Venezuela released statements expressing their support. So they're all in on this thing. They all agree, hey, we will reduce oil output. And for good reason. I mean, because number one, it increases the value of their oil. And number two, they don't have any spare capacity. So they have the power to increase oil prices, but they don't have the power to decrease oil prices because there's just not enough oil. So I'm going to show a video here. Analyst Paul Sankey and his warnings about the oil and gas industry and where we're heading.
No flies on me. We had Halim on. In fact, we had her on a lot yesterday, talking about the surprise notion that there could be an OPEC production cut after they barely, gave the president anything with 100,000 a day. Is what you're saying based on that at all, Paul, or other things?
Well, I mean, in that statement, they did say that we're out of spare capacity, that we've got a supply problem. So I think what there was frustration from the Saudis that the oil prices come back as much as you guys have mentioned. Yet they still see strong demand. They still see a problem with supply. And they actually also, for you guys, trading guys, saw a major problem between physical and paper markets. So they feel that so much liquidity is out of the paper market that the price is not really, that you see on your screens, is not really reflective of the physical market behind.
We had a long discussion this morning on that that OPEC or the Saudis were complaining about price manipulation. Isn't it a cartel? Isn't that what that's what they do for a living, don't they?
Yeah, sure. Basically, I mean, yeah, they're trying to organize the price, but I think what they're really saying is there's a disconnect between the price you're seeing on your screen and what's out there in terms of physical reality, in terms of what they're seeing.
Fundamentally speaking, oil prices should be much higher, okay? And so the messaging that we have enough oil is winning, okay? And here's the deal. The oil markets, the prices have been going crazy for many reasons. Number one, market manipulations. Number two, we're flooding the market with 1 million barrels a day from the Strategic Petroleum Reserve, which is going to end in October. We were expected to lose about 2 to 3 million barrels a day from Russia, where we did not. And also the demand for China has reduced by 2 million, okay? That's a difference with the 3 million from Russia, 2 million from China, and the 1 million barrels a day from the Strategic Petroleum Reserve. That's a difference of 6 million barrels a day that we were not expecting, bottom line. And so how are you supposed to price a future contract with all of these variables not lining up the way we all expected? And that's why we see the fluctuation in oil, okay? And then add in the federal rate hikes and the messaging, okay? And so if oil prices are $100 a barrel right now, with everything that's happening, with demand fears and everything else, what do you think they would be if we actually lost Russian oil, if China comes online, if the federal rate hikes were not increasing, if the market manipulations were not happening, if Joe Biden wasn't so desperate to buy your vote by trying to send the right messaging to help control oil prices and releasing oil from the Strategic Petroleum Reserve, using every financial instrument to try to reduce oil. They have done everything they can, and they have nothing left. The only option they have at this point is actually to do what they say they're going to do and start building green infrastructure, start building green technology, and start building wind turbines, and start building infrastructure and solar power panels to actually reduce us off oil. But the thing is, I've got news for you. It's not working. They spent $5 trillion to only reduce fossil fuel by 2%, all the while oil demand has been growing and increasing. We're using over 100 million barrels a day, and we're in a recession? I mean, guys, it's only going to get more interesting. Now, I see something coming down the road that is going to be detrimental to the world, okay? So BRICS is an acronym coined to associate the 5 major emerging economies: Brazil, Russia, India, China, South Africa. The BRICS members are known for their significant influence on the world affairs. Since 2009, the governments of BRICS states have met annually at formal summits. China hosted the most recent 14th BRICS summit, July 2022. BRICS host new development banks contingent reserve arrangement, BRICS payment system. Okay, so BRICS has their own payment system, and the bank is called BRICS New Development Bank. Okay, so they have their own banking system. Okay, they have their own organization. I mean, you look at this group here. It's the most powerful countries in the world coming together. This group is why Russia remains in power. This group is the reason why Russia continues to be able to sell their oil even though they're bombing a peaceful country. And they're only growing in more power, okay? Emerging markets rush to join BRICS alliance as high energy prices persist. Why? Because they see an opportunity to be able to form alliances to get the energy they need or to sell their oil. Saudi Arabia doesn't want to miss out on this, because you look at Russia, if they remain in power and they're still able to sell their oil skirting the sanctions of the most powerful country in the world, oh yeah, I want to be a part of that. As emerging markets recover from the COVID-19 pandemic and face financial headwinds due to the interest rate hikes in the U.S., the BRICS Group, Brazil, Russia, India, China, and South Africa, is looking to extend its membership to tackle shared challenges at the 14th BRICS Summit held in July. China, Russia, and India discussed the potential entry of Egypt, Saudi Arabia, and Turkey, which are reportedly preparing applications. Saudi Arabia is coming aboard. Why? Because they want to sell their oil. This announcement came after the disclosure in June that Iran and Argentina had already applied with support from China. In addition, international media has reported that Algeria, Bangladesh, Indonesia, Mexico, Nigeria, Sudan, Syria, Pakistan, and Venezuela have expressed interest in joining the organization. An online meeting hosted by China in May, potential BRICS applicants included the foreign ministers of Argentina, Egypt, Indonesia, Kazakhstan, Nigeria, the UAE, Saudi Arabia, Senegal, and Thailand. Okay, now here's the deal. Saudi Arabia has lost a lot with America. America once was desperate for that relationship because they needed their oil, and Joe Biden has turned their backs on them. And so Biden realized the importance of that relationship, and he went begging Saudi Arabia, as where Saudi Arabia is now threatening to curb oil production. That was a total slap in the face to America. And so this is even a bigger indicator that Saudi Arabia understands that his relationship with America is dissolving, or not now, but he could see the importance that if he does not become a part of this group, he's going to miss out on what is taking place here. Okay, and so I'm going to read a little more so you understand. Coined in 2001 as a term to describe a group of high potential emerging markets, BRICS have become central drivers of the world's economy. As of December 2021, they accounted for 40% of the world's population, 25% of the nominal GDP. 25% of the GDP of the world comes from this organization, and it's growing. At 16 trillion, 30% of land mass and 18% of total trade flows, while holding a combined 4 trillion in foreign exchange. Guys, listen, they are taking the grip of American control, of their ability to sanction, of their ability to cut off a central banking system from you. They're taking those grips off their backs, and they're bringing the control. I mean, they control oil. If Saudi Arabia and Russia and all these countries, the UAE, come together, I mean, they're basically taking OPEC control. They will control oil. And if they cut off America from oil, the ability to trade oil and the ability to buy oil, America's done. And we're going to be paying $200 a barrel for it. And it will cause oil not to be global anymore. If they cut America off from oil, we're going to be like Europe, having to pay crazy, exorbitant prices. Russia's invasion of Ukraine and Western sanctions are galvanizing China and Russia to attempt to switch from the U.S. dollar as a form of exchange and increase bilateral trade, especially in the all-important hydrocarbon sector. Okay. Now, if you understand, the U.S. dollar was worthless up until we backed it by gold. And then we ripped away the gold standard, okay? And we did that because it gave us the ability to print as much money as we wanted. And we started doing that when we went to war in Vietnam. We didn't have enough money to pay for the war, so we started printing more money than we had. Well, the world caught on. And so we ripped away the gold standard to make it legal to be able to print as much money as we wanted, but then it causes a massive amount of inflation. We stopped inflation by making a deal with Saudi Arabia. Say, hey, Saudi Arabia, we're going to continue to buy oil, but if you sell your oil in U.S. currency, we will protect your assets. We will send in military, we will protect you from countries like Iran and other surrounding countries. And they made a deal making our currency the most powerful currency in the world, because every time a barrel of oil was sold, it was done in U.S. currency. So every time Russia sold or bought oil, every time China bought oil, every time any other country bought oil, it was done in U.S. currency, making our currency the most powerful currency in the world. Now that our currency is being threatened by this group because they have their own bank and they're buying oil amongst one another with their own currencies, bypassing U.S. currencies. Since March, trade volume in the Chinese yuan and Russian ruble has grown. Yuan-ruble transaction and currency markets hit a daily record high in late July at 1.2 billion, outpacing euro-ruble trading volumes, while Russia purchased 6.7 billion in goods from China that month. The surge in Russia buying yuan-denominated goods has also been driven by continued strength of the ruble, buoyed by high prices for hydrocarbons. Okay. In July, India's central bank announced a plan that would allow domestic importers to buy goods in rupees, which will then be credited to an account held by exporting country most intensively to enable smoother transaction with Russia. More recently, in early August, Reuters reported that Turkey also agreed to bolster cooperation with Russia by purchasing its gas imports in rubles. China and India now account for over 40% of Russia's total crude oil exports, whereas last July, the figure roughly 21.7%. While noteworthy, Russian dependence on the two countries could create new challenges, and there are already signs that this cooperation has reached its limits as imports declined in June and July. Now, this is very key. The US dollar accounted for 58% of global government currency reserves at the end of June 2022. Okay. Now, at one point in 2019, 88% of currency trades were done in the US dollar. Now, here's what you need to understand. If you live in America, you're buying oil with your currency. The rest of the world is trading their currency for US currency to buy oil. So, for instance, Canada, they're having to pay 20% more for oil, 30% more for oil. That's where we don't have to exchange it. We just buy it. Guys, what this means is that you're going to be paying more for oil than you've ever paid before in the event that Saudi Arabia starts selling their oil in other currencies. And they're about to join this group. They want to join because Saudi Arabia sees the power in this, because if they don't join, they might not be able to sell their oil. And they might be cut off from this mechanism that is controlling a massive amount of the world economy, and it's growing. And see, in the past, when, for instance, Gaddafi, when they, in Libya, when they started trying to prop up the dinar, we sent our tanks in, destroying that country, and we propped up our central banking system, continuing to support the most powerful currency in the world, which was the US dollar. This is a direct attack against the US dollar. What are we going to do? We can't just send tanks in like we did Libya. What are we going to go bomb China and Russia? Saudi Arabia? Hey guys, you can't do that. We're going to drop bombs on you. I mean, they're so smart. And this is going to, I see a day coming when, because we've been sanctioning the world for years, and they're tired of us playing world police. They're tired of our sanctions. They're tired of our control. They're tired of making us richer with each trade. Now, they could cut us off from oil. They could cut us off from the ability to export oil. They could cut us off from the ability to buy oil. And if we do buy it, it'll be done on their terms and their currency at their price. Guys, they are setting the stage for a global power like you've never seen before, and we're going to be paying high prices like everyone else. Guys, commodity prices are pegged by US dollar. What do you think is going to happen if we lose that power? Commodity prices are going to skyrocket. Oil prices will go up, even if demand doesn't increase. Critics argue that this current push for BRICS expansion is driven by China's intent to gain a larger footprint in the global economy. You bet it is. China wants to become a world power, and this is why he's going to go meet. He's planning to go meet with the Saudi Crown Prince. Let's see here. Okay, so what to expect from Xi Jinping's visit to Saudi Arabia? Okay. The kingdom's reception of the Chinese leader will be keenly observed by Western media to assess whether Riyadh is closer to Washington or Beijing and whether relations with the U.S. are likely to change. Riyadh, Beijing clinched a strategic partnership in 2016 to promote bilateral relations. China and Saudi Arabia are comprehensive strategic partners. We are ready to work with Saudi Arabia to keep commenting mutual trust and deepening cooperation. So China is about to go meet with Saudi Arabia. I believe that China is meeting with Saudi Arabia to solidify energy security because of one of a few reasons. Number one, he's about to bring China back online, removing COVID restrictions. He needs oil. Oil demand has been reduced by 2 million barrels a day because China lockdowns. Once he opens up China, he's going to need more oil. Okay? And so I believe that this is a message to the world. Hey, guys, China is about to come back online. Number two, he wants Saudi Arabia to be a part of the BRICS. He is trying to build this organization to control oil, to control energy, to control food, to control America, to get the grip of America off their backs, okay? And so that's going to be detrimental to U.S. currency, and we're going to be like the rest of the world, having to pay higher prices for energy, higher prices for commodities, okay? But here's number three. I think China is about to make a move on Taiwan, which is another reason to solidify an agreement with Saudi Arabia so they have enough oil. Because without oil, they can't go to war. And I believe this is why Russia was able to be successful. We didn't know that this BRICS in the background was having an agreement in place. Hey, guys, Putin probably went up to China and these other guys, hey, look, I'm looking to go drop bombs in Ukraine. Can I count on you guys to buy my oil? Because America is going to come back at me pretty hard. I mean, you couldn't have done what Russia has done without this alliance, without these agreements in place. Guys, I'm here to tell you that Saudi Arabia, OPEC, it doesn't matter what happens on the world stage. It could always be undermined by curbing oil output. And Saudi Arabia is about to take the control back from America. And Saudi Arabia is not getting what he wants from America. And America is stabbing him in the back by doing business with Iran, allowing Iran to sell their oil to increase the money in their coffers to pay for more war. Because Saudi Arabia is dropping bombs. The Houthi rebels, which is backed by Iran, is dropping bombs on forces in Saudi Arabia and Yemen, on forces on Saudi Arabia and Syria. Iran is causing issues in Iraq, trying to build something there. And they've dropped bombs on Saudi key oil facilities with Houthi drones, which are backed by Iran. And here we are putting Iran in a position to prop them up to make billions and billions of dollars. Saudi Arabia is going to rip the rug out from underneath America, but they need this relationship with BRICS. No different than Putin needed the relationship in order to do what he did in Ukraine. China needs this relationship to be able to do what he wants to do in Taiwan, and also to bring his country back online, and also to become a superpower, because he's tired of Xi Jingping and Putin and Saudi Arabia is tired of making America rich. So guys, I see, and there's many, many analysts that are saying that come 2023, China is going to come back online. We're going to we're losing the strategic petroleum reserves. Demand is increasing. Oil is going to be well over $150 a barrel next year. That's what I'm hearing, okay? But just even if oil prices stay around 80-something dollars a barrel, fundamentally, if they stay at $80 a barrel, which we're nowhere near that, but fundamentally, if we're at $80 a barrel, it's going to be more like 120 if they bypass our currency. Technology on Amazon, a lot of it's coming from China. A lot of our energy is coming from OPEC. But it's all being purchased with U.S. currency. If we're having to start buying that with another currency, prices are going to skyrocket, guys. Guys, buy commodities, man. Buy commodities while you can. at the price you can. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe. And if you're interested in getting involved in oil and gas wells, please look in my description below. There's a link to my form, and I would love to chat with you. Thanks.